Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is February 2nd. It is Tuesday, 2021. It's Groundhog Day, and the groundhog said that he saw his shadow. So it looks like, according to the groundhog, we're going to have 6 extra weeks of winter. And depending on where you live, that's either good or bad. For me, I'm in Hawaii, so it's good. The weather is generally good here year-round, but in my personal opinion, the weather is best in the wintertime. We do get more rain. It's the rainy season, but that also creates rainbows. So a lot of great pictures you'll get. So come and visit us. And in my opinion, if you want to see the great surfing, a lot of that happens in the wintertime up on the North Shore with huge waves. So come and visit us. I'm sure there's tons of cheap flights out there right now. Just make sure you follow the guidelines in order to, get on the plane, get in the state, stuff like that. So, but also remember, I'm not a financial advisor, so please do your own research. We are going to be looking at Alphabet, the parent company of Google. In this video, I'm not an economist or an accountant either, so please do your own research and please subscribe to the channel if you haven't already. Thank you to everybody who has already subscribed, continues to follow my channel, and like my videos. There is a thumbs up button there for you to like my videos. And feel free to share with your family and friends as well too. So Google here at the end of the U.S. stock trading day, up 1.38%, trading at over $1,900. And then you can see here in after hours, the stock is up almost 7%. I think in after hours at one point it did climb over 7%, just barely over 7%. And that is assumed because of the great earnings report that we're going to look at here. Also a little bit of a stock analysis summary of the company as well too. As far as the company is concerned, they don't pay a dividend. I am primarily a dividend investor, so that's why initially I didn't really get into Google at the beginning. I do have a small position of them, and I'll tell you about that here in just a second. As far as market cap is concerned, they are one of the few companies in the U.S. that has a market cap of over $1 trillion at $1.28 trillion, according to Seeking Alpha. Amazon and Apple are the other two companies that have a market cap of over $1 trillion. And I wouldn't be surprised if Tesla got there really quick too in the next 2 or 3 years. So 5-year return, if you were so lucky to start buying this stock 5 years ago when it was trading like $600, $700, $800, your total return is over 150%. Year to date, you can see that the stock is up almost 9% at 9.5%. So you can still get really good returns from Google. It wasn't the type of returns that I was looking for my investment strategy. So that's another reason why you want to do your own research, because you want it to fit your investment strategy. I do a barbell approach to investing, but I do own a little bit. And this is the website, trackyourdividends.com, that we're looking at now. I use this website not just to keep track of my dividend payment, but also to see what my dividend payments will be in the future. This is a free website. I really like it. I have some other videos talking about it. But I've got my portfolio value here, my yield on cost, dividend yield, and then your annual income. And that's assuming that all the companies that you own will continue to pay that dividend. So this is the little bit of Google that I own. It's what ended up happening is somebody in the comments requested a review of the public investing app. That app does not work on my Chromebook. Apparently they don't have a desktop version, so you can only use it on your phone. So I just decided to show it to you here in trackyourdividends.com. So it gives you your ticker symbol, your shares, and your price. So my shares is 0.01156. What the public investing app allows you to do is they allow you to choose your own free stock slice, which basically is a fraction of the company, fraction shares of the company, up to $5. So when I clicked on Google, because the other companies they had listed there, I already owned positions, they gave me $2.50. So that's why I have 0.01156 shares of Google. And my total profit is $5. And I think I ended up adding another $10 to it later on there. So, but my average cost $1,400, and the stock is trading at in after hours over 2,000. So, I've got a pretty good return on my $10 or so, $5 or whatever it is that I put into it. So, but let's go ahead and look at this. This is from Alpha Street. They put this graph chart together. I use this website a lot for my YouTube videos because I like how concise they put all this together in this graph. So this is quarter 4 for Google Alphabet 2020. announced after hours, February 2nd. And as you can see, the numbers are amazing, which basically the numbers are always amazing for Google. If you're not familiar with them, their products, probably their best known product is the search engine. Everybody says, well, just Google it. It just turned into that type of, adjective, I guess. Just Google it. Why don't you just go ahead and do that? Or I guess that's a verb, not an adjective. It's been a while since I've been in school. And I'm 45, so I'm approaching the top of the hill there, or maybe I'm heading down the hill. But anyway, that's their biggest profit is their ad revenue. They also bring in a lot of ad revenue from YouTube. They own YouTube. They also have their cell phones that they put out. They also have the Chromebooks, which I own. I love Google products personally. I don't have any Apple products at all. Since I left Palm Pilot, I moved into Android, which is owned by Google as well too. So I have a phone that runs on Android, and then I have another phone that runs Google's pure Android in their own personal phone. And then they do earbuds and watches and all that other type of stuff too. They did acquire Fitbit. They also have autonomous driving. They own Waymo, which Lyft actually uses Waymo for their autonomous driving. I believe they still do it in Vegas. I don't know if they turned it off in 2020 because rides just weren't great for rideshare in 2020. Maybe they're starting it back up again as people are going to start traveling around again this year. But that's another reason why I like Lyft over Uber is because they are partnering with Google. And there's really only one negative thing to Google and all the other FANG stocks, Facebook, Amazon, and I guess you can throw Netflix in there too, and I'll mention that at the end of the video. Really the only negative to these companies. But their numbers are amazing. And if you want to see a company with the almost perfect, and I do say almost perfect, balance sheet, it is Alphabet Google. As you can see, their revenue grew 23%, almost $57 billion. GAAP net income grew 43%. Operating income grew almost 70% to $16 billion at $15.7 billion. And then you can see here, based on geographic region, where they brought in the most revenue, and it was growth in all these areas. Eastern, Middle East, Asia up 22%, Asia Pacific up 32%, United States up 23%, where you would think that, maybe they've tapped out a little bit in the United States. Nope, still over 20% in revenue growth. And then the rest of the Americas in double digits as well with 14%. And then as far as their different segments, they've got Google, and then they've got their other bets. Google revenue, almost $53 billion, and then operating income over $19 billion, which was all these are gains as well too, over 20%, over 40% for operating income. Other bets includes Waymo. It also includes this other company, I think it's called Verily. That grew 14% to $196 million. Operating loss, they did have operating loss as far as their cloud service was concerned. I believe it was like Alpha Street here says $1.4 billion, but when I read it on CNBC, I thought they said that the operating loss for their cloud service was like $1 billion, a little over $1 billion for the quarter, and over $5 billion, and it was the first time that they were at a loss for the year over $5 billion in their cloud service area. But as far as revenue is concerned, the cloud area grew 47%, almost 50%, to $4 billion in cloud revenue. And then their other revenue up 27%, and ad revenue, which is the juggernaut, that's what brings in the majority of their money, grew 22%, over $46 billion. So I know I'm rattling off all these numbers in the billions, but I don't get to say billion a lot unless I'm doing one of these videos. So some other numbers here that I like to see here. Cost and expenses was down 12%. Operating cash flow is something that I look for in a company. And the reason why I look at that is because pretty much every company is going to carry debt. And what you want to see is if they have good growing cash flow, then they're able to pay down that debt. Or at least you want to, at the minimum, in my opinion, is you want to be able to see that they can refinance that debt if they use some of their cash flow to pay it off. So with Google, not a problem. Operating cash flow almost $23 billion, which grew 57%. And free cash flow didn't grow, but they have sitting free cash flow over $17 billion. So they have long-term debt, and this could be stretched out over 10 years or so, their long-term debt of almost 14 billion bucks, but they can pay that off easy with just the free cash flow of 17 billion and have about $5 billion left over. So as far as cash and cash equivalents and other marketable securities, over $136 billion. So amazing quarter, amazing year for Google, Amazon, as always, my personal opinion. Look into them. I don't think I mentioned YouTube's numbers, but YouTube's numbers, according to CNBC, they're just the ads money. And there are ads on my videos, so I appreciate it if you'd like, if not just you subscribing to the channel, but you also watch the ads at least until it gets to that 5-second mark. They're only asking you to watch 5 seconds of it for the YouTubers to get paid a little bit, and I don't really get paid anything. I haven't even gotten a check yet from YouTube as of yet, but their ad revenue brought in almost $7 billion, and it's not listed here on the graph, but I saw on CNBC, their website, that it was $6.89 billion for the quarter, which was up 46%. So from the previous time last year. So, and the previous year they didn't even bring in $5 billion. It was like 4.7 billion or something like that. And a lot of that is because of the stay-at-home economy. So like I mentioned in the Facebook stock analysis video that I did, you would think, and typically what happens when the economy starts to go south, when we go into a recession, people start to lose their jobs, unemployment rate goes up really high, businesses will cut ad revenue first. But this one was a little bit differently. Sure, the restaurants and the other small-time businesses that have to close their doors and stuff like that, they reduced their advertising revenue. But companies like Facebook and Google and even Netflix, they would have either increased or kept it the same because people were at home and had more time to stay at home. So with that, you don't want to decrease your ad revenue. You either want to keep it the same or increase it because you've got more screen time. And I believe it was the CFO actually mentioned that in the interview on CNBC, that they saw more screen time. Screen time on YouTube was up so huge that their ad revenue really didn't get hurt at all. And the same thing with Facebook. But you would have thought that would be the case. You get rid of your salespeople and you get rid of your advertising dollars in a recession, unless you have somebody's undivided attention. And Netflix, everybody was binge watching Tiger King and all the other shows, and YouTube was growing. More people were creating their own podcasts and YouTube channels and things like that. So that brought in more ad revenue. So that just helped Google and Facebook and these other companies that their whole business is run on ads, especially Google, bringing in over $46 billion. That helped them grow even more. So look into the company. The one downside that I see to Google and to Facebook and Amazon, and this is the only downside to these companies, is will their innovation, will their growth be stunted, where the U.S. government has already been bringing them back to Capitol Hill all through 2020 and previous times before. And I read and also heard someplace else, I believe it was in the news, that Microsoft's growth was stunted a little bit when they constantly had to, when regulations hit them, and they were constantly going and testifying about market share and fairness. Facebook bought up Snapchat, bought up Instagram. Facebook almost buys all the competition. And now Google, YouTube can basically be their own company. If they had to get rid of YouTube and spin them off into their own business, that would be another company to invest in, because the ad revenue and the money that just YouTube in itself generates, like I mentioned, is over $6 billion. So that's the only downside to these FANG companies and to Google and Facebook as far as ad companies, is if the U.S. company tells them they have to start getting rid of some of these other segments. So if Waymo starts to really grow and Google says we want to buy Lyft, the U.S. government might say, no, you're already big enough. Amazon owns Whole Foods. In China, Alibaba tried to buy the largest grocery store over there in China, and the Chinese government stepped in and said, no, we're not going to really allow you to do that. So that's really the only downside to these companies. But in my personal opinion, you're still going to get really good returns to them, especially Google. Maybe it breaks out. Maybe it jumps up to $2,500 or $3,000. But you're still going to get some good returns along the way. So anyway, I've got another video for Amazon coming up for you soon. Please subscribe to the channel and feel free to share with your friends. Mahalo and aloha, everybody.